Money on my mind, gotta hustle and grind. Financial literacy always on my mind. I'm stacking knowledge, no time to waste. Gotta invest smart, gotta keep up the pace. I'm reading books, learning all the tricks, studying the market, making calculated picks.
What's good, everybody? It's your boy Reckless Ray Dinero. Oh, geez, started off with the goods. You guys got to earn the goods. You got to get through my rant. It's your boy Reckless Ray Dinero. We're back at it again for another portfolio update. It's the beginning of June. I'm excited. Summer is here. For those who grew up in the Midwest, I don't know if it's a cultural thing, but I think it's June 2nd. So like come Monday, the air conditioning can be turned on. I don't live by those rules, but growing up at my grandmother's house, my parents' house, my great grandmother's house, we'd have to sit through some maize hot, and I didn't like it. And that's the reason, one of the plethora of reasons that I have to be rich. I don't want to have to worry about what the temperature's set at. I want it set at what I want it to be set at for me to be comfortable. It's important. But that aside, we're about to dive into my portfolios. So that's going to encompass the ones that I update monthly, which is the primary income portfolio, the long-term holdings portfolio, and then I now have an in-home banking portfolio. I have moved that in. So there's 3 portfolios there now. It's the in-home banking portfolio, and I'll do a little blurb on that. For those of you who don't know, I've done a video on in-home banking. I'll probably do an updated one on my updated strategy, where we can touch base on that and what the strategy is. I'll probably put a blurb on it around here, and then we'll do a deep dive on it at a later date. But we jump into the portfolios. I give the receipts. We actually look at the Charles Schwab account for the primary income portfolio, which I will be predominantly living off of at some point. We'll go into the snowball analytics to see what our projections are on that. But of course, as always, full transparency. I tell the truth over here. And in regards to these portfolios, I do show you the Charles Schwab account. Like, I'm not going to not give the receipts. Like, there's nothing identifiable in there. It's just numbers. I mean, unless you have a quantum computer and can get my pass keys for my Bitcoin wallet, in which case the 3 digits that you can see on my accounts, I guess you guys can do what you do out there. But we're gonna go ahead and jump into it. Before we do, I want to give you a reminder, go ahead and hit that like button. If you've been here more than twice, go ahead and formally join the Wolf Pack by hitting that subscribe button, hitting the bell next to subscribe, and making sure to turn all notifications on. I promise I will not flood your feed. Lastly, for the Wolf Pack, since this is just starting, go ahead and get it shared. Share the video. If you guys like what you hear, share the video. We want to get the video out to as many people as possible so that we can grow the Wolf Pack. There's plenty of room to eat at this table. Lastly, this is not financial advice. This is my portfolio, my money, my experience. I can't speak for everyone's experience, but I can speak very in detail about mine, my thoughts, what I'm doing, how it's affecting my life. This isn't financial advice. This is a documentation of one average Joe, working Joe, slight blue collar working Joe at that. I got dirty, rough hands. I come home dirty. I come home covered in filth sometimes because of the nature of my job. If we're doing construction, I'm covered in sawdust and dirt, and it's what it is. So as someone who doesn't make over 6 figures, this is my experience and documentation. I'm not preaching down from the mountaintops. I love it when the people who are at the mountaintops, that their strategy isn't mathematically sound or correct anymore. Tell me what's not going to work for 15 years and being wrong. I mean, Bitcoin. But it is what it is. And the ones that have gotten the memo are now buying Bitcoin and telling me I'm a genius. And the ones that are not are still on the wrong side of the wealth transfer. And the wealth that they have is being transferred to the me's of the world, which is awesome. Moving forward, we're going to go ahead and pull some stuff up. Let's get to the good stuff. Let me make me small. And I think we can big this. Oh, there we go. One big. There we go. Okay, so as we can see, the total value and the portfolio that I don't go in is the family fund portfolios because that is not something that I consider my money. But what I have done is I don't believe that, and this is just my perspective and the way that I'm going about things because, again, it's my money, so I get to kind of decide what I'm going to do. I have started for my great nieces and nephews, because I don't believe that you can fix adults. I believe after you get to about high school age, your mind is set, your trajectory is set, and until you rock bottom, you're not going to make that pivot or adjustment. But you can fix children. So I do have funds that I've started for the babies, because like a baby, you can influence and hopefully be able to set some of them up for success later on down the road. If not, then, I can just keep the money. But I do have standards and expectations that come with that money. And if things aren't going the way that I see that they need to go, that money's not getting handed over, because at least with me, we are no longer doing the whole nepotism thing where all the resources go to the knuckleheads of the family. No, they will not. They will go to the people who will be good stewards of money, people who can take the education. For you younglings that are watching the video that might be getting influenced by this down the road, this is the standard. This is my will. It's my money. So that I don't even factor it into my money. So the total value is always a little bit less for me. So I will scroll down here to the end. So like it's got the family funds. There's a little bit of money down there. The $41,950.01. That is what I consider my money, because those are my accounts. As we can see, my failure fund has 92 cents in it. My Roth, I do not use my IRA. I don't use that. We've got the income, the long-term holds, and the in-home banking. We're going to go ahead and start off with in-home banking. We're going to actually work our way up, because the income, that spills over into the snowball analytics, and I don't want to jump back and forth. So we're going to go straight on over into the in-home banking. What do we have in there? In-home banking. This is going to be an interesting one. I started off just kind of dumping into IMST by Bitwise. I am not using Misty in this portfolio as an experiment. We got a pretty big payment. I still owe myself about another, I think it's at least another $1,200 that I still owe myself, because I have an outstanding loan to myself. In-home banking basically is you have a pool of money that you use and loan to yourself. You pay it back with interest to yourself. You have to be financially responsible for this to work, obviously. But I use it as kind of boost money or large purchase money. If there's something that I want to buy, I'll buy it out of the in-home banking pool. The reason this was a cash account in my savings account, and I do not like stagnant money. And even though I'm using it and putting it back in and using it and putting it back in, because as soon as I pay the loan back, I redeploy it for something. We also use this as redeployment for assets, which is another opportunity that I have with this portfolio being in next to my portfolios, because a lot of times I use it for investment money. And then I charge myself a flat 10%, pay it back, and yeah, we keep it pushing. So with this, I decided to do a little bit of an experiment, which is being a little bit risky with my pool of money. But I was like, having in-home banking is awesome. What would be even more cool is if we had in-home banking in a fashion that, in a sense, made a self-repaying loan. And so that's kind of where I was like, oh, I should just have this in my brokerage account and have one of my accounts. And so this account, I don't really use that often. It was originally set up to be for options trading. I'm not a good options trader. I'm not going to even pretend to be. The one play around that I did in this account lost all the money. So at a certain point, I will probably flip the switch and we'll have options running out of here as well. And then there'll be an in-home banking cash reserve pool that's also tied to this. And I'll probably just take a really big loan from myself for the in-home banking once I'm ready to start that. I would say probably around the time that we get to $5,000 is going to be my jump off the porch for messing around with that. I will not be making those plays of my own volition. Also, once we start doing that, this portfolio will probably be coming offline as far as something that I talk about, because I will be joining an options trading community, because I'm not going to be acting like I'm doing that on my own volition and out of respect to that group and the fact that I'm going to be paying to be in there. This portfolio will probably be, we'll stop talking about it so much, but I want to do the growth up to $5,000, because outside of me paying myself back, this will be funded fully with the dividends that it kicks off. Actually, what'll happen after I start doing options is I will open up another portfolio for the in-home banking, and this will just go back to the options portfolio. That's what's going to happen. Reason being is because I'm also going to be housing the savings for the lump sum payoff of my house. Well, not payoff, pay it down to $20,000. I'm going to keep probably about 20 to 50. I'll say pay it down to $15,000. I'll have a minuscule payment, so that way they keep handling my taxes and stuff. And I know people will be like, "Oh, but you're paying interest on that." Like, it won't matter with how much money I'm making. Like, it won't matter. And then I'll have a retainer on there for the last $15,000, so I could pay it off at any time, and I'll just choose not to and keep collecting dividends. But this portfolio, we got the IMST position. We had a pretty good size pay of $98. Obviously, MSTR being on the downward spiral and a big payment, NAV took a hit, and then the underlying dropped, so we kind of dropped. It's in a holding pattern. I'm still going to continue to probably just dump in here into Bitwise, and then what we will probably do moving forward, because we have enough shares to get a decent payment with what they're paying. So we were right under $100. What we'll be doing moving forward with the dividends here is we will be buying into Strike, which is not a monthly paying dividend, but since I'm paying myself back, so the pool of money that I'm paying myself back is going to go into IMST. But the dividends that IMST kicks off, we're going to put into Strike, because it's an aggressive, stable cash pool. So you got the 8% quarterly. So depending on how I'm pulling the money out of that account, I don't know. Yeah, depending on how I'm pulling the money out, because it's pretty much stable as a cash account, depending on how I'm pulling the money out of that and how often, I'll be able to, you know what? If I'm still taking little mini loans, I'll just sell off the IMST. Because first of all, it's going to be a tax loss harvest. Second of all, as I'm buying back in and cycling through the account, oh yeah, that's what we're doing. We'll just take it out of the IMST, and then all the dividends that get kicked off, everything that we get paid, we will move the dividend side of things into Strike, and then the Strike we'll just let sit, and then we'll keep building up that way until we get to the $5,000, and this converts back over to a into a options account, and then we'll reopen the home banking, and then be repaying ourselves back out of hopefully the wins that we get doing the options. Okay, so that's it for that one. For as far as the in-home banking goes, we're gonna go next to the long-term holds, because we got some stuff to talk about in here. Y'all gonna be wondering. Well, I sold all of my MicroStrategy stock before the dip also. So what do we do with that? The reason I did is because I had a little bit of FOMO. And I had FOMO. I did not get into the the cash balance of the account, which is our strike, which is what we're using over in this position. As you can see, since we purchased that, we are up 14.22%. The account total is down. Oh, you made a bad decision. Like, not really, because we was floating between 5,000 and about 6,500 anyway. MicroStrategy is down. Guess what? All of the other Bitcoin reserve companies are down. Now, am I going to invest in every single Bitcoin reserve play? Absolutely not, because I do understand that this is a bubble and people are going to get way more wild, way more risky. And then when the bubble pops, a bunch of people are going to get caught on the wrong side of that trade, because this is a trade. What I have decided is my main ones will be MicroStrategy, which I am going to buy my 10 shares back. I will, I promise. So I'm coming back, MicroStrategy. This doesn't mean that I don't believe in MicroStrategy, but I understand how these tier out. So basically, your first mover advantage, that's always going to be the stable and best out of this very volatile space. The most stable and probably the least upside, but it'll still be a lot of upside. Instead of trying to scatter blast and get them all, I'm going with the ones that I've got a good feeling about. Metaplanet is one that I'm buying into. It's an international company. I like it. They've been in the space for a while as well. So that's my way of diversifying without diversifying. International version play on Metaplanet. The next one is the 21 Capital. All I can say is I got a good feeling that they're going to do what they need to do. They also are going to be generating income from within the space, which supports the space. So that's going to be another play. I feel like they're going to be aiming at, like, you're not going to be more aggressive at MicroStrategy and Bitcoin acquisition, but I think the value proposition there is they actually are going to have businesses that generate income that are relevant. Whereas MicroStrategy, their business side of things, the Bitcoin is kind of carrying that. Michael Saylor himself said that he would have had to sell the company or pack it up and shut things down at the rate that they were going with the business that they have. So their business side really is not even why people are invested with them at the moment. Like, you're not investing in strategy because you believe in their cloud services business, like their whatever it is that, like, I don't even know what their business does. Like, we'll put it that way. So Bitcoin businesses, generating money from within the Bitcoin space from providing businesses solving problems sounds like a good play to me. Also, a large treasury, holding treasury, sounds great to me. Those are going to be my three. And then I'm going to have to start venturing out and finding like other things to invest in. Circle's getting ready to go public, so that might be a play as well. Again, another thing within the industry. And yeah, so, and then we have our cash balance, which is roughly 10% of the entirety of the holding. I need to buy one more share of Strike the next time I do a cash infusion in here to get that up to par, because we're sitting at about 6,000. We got 5 shares, which is totaling 518. Obviously we're in a little bit of a lull. Bitcoin went down, but we hit our target of 100 shares of the 21 Capital. It hasn't switched over yet, so it's still Cantor Equity Partners. So we're still sitting with that. This has been doing a pretty interesting fluctuation. I might buy more if we get down to about like a 20% dip. If I can get some sale price on this, I might add to the position. Metaplanet, we're looking at getting between 500 and 1,000 shares. So I've got a few more shares to buy. I don't like spending less than 500 a block on this, because you have to pay a $50 international exchange fee, which I'm pretty sure you also have to probably pay on the way out. So I'm getting taxed with fees on this position specifically right now. So we're trying to buy in orders of 100 or whatever we can get for $500, because I'm paying top dollar. I FOMO'd in, but I'm going to be okay. I'm going to be okay with it. And then obviously Strike for MicroStrategy, we're doing wonderful on. We buy that to kind of balance out the portfolio. So we have a 10% cash position. I'd rather have it sit in this than sit in cash or the S&P 500. because I'd at least like to be in the ballpark of keeping up with inflation. Now, if I legitimately wanted to flat level this out, I would go with Strife and get the 10%, but I also want the access to the upside on this bond. This protects you. It doesn't give you as much upside, but it also doesn't give you the same level of downside. As you can see, this is sitting in the green while everything else is going haywire within the space. All right, so that's the long-term holdings portfolio. Next, we are going to move over to the bread and butter, the income portfolio. Now, this one is interesting. So first and foremost, kudos to us. We're up over $30,000 in this portfolio, which is kind of nice, building something up like that. We put in a lot of work. Now, this is where the numbers get kind of funny. So my total gain loss right now, we're down 18%, which is all Misty. We have consolidated out of everything but our dust shares of everything that isn't Misty. We did do a small buy on IMST to get a taste of it in this portfolio because moving forward, it's going to be a position. We'll be rebuying into LFGY for our weekly filler. We're going to have a little bit of IMST in here. As it sits right now, we're looking at putting in some PLTY Platey for the Palantir kind of as an offset. It's AI is a secondary space that I am interested in. Not as much as crypto, not willing to bet the bank on it, but it is a strong payer that's on my other day that I get my W-2 paycheck, which is where I want my big pays to be. I like to double up those checks. So Palantir will be my next position. And then as we're buying Palantir, when I do those buys, I'll probably throw in a share or two of IMST to kind of offset that. We're going to start doing buys of LFGY. I'll probably get this up to around $100 a week. I'll probably start dripping it up until that. I've got drip turned on everything but Misty right now. Fiat, I tried to sell. I didn't have a full share, and they want you to sell full shares. So I'm gonna work on that. Like I've been trying to get it out of here, and it won't go away. But Misty, our main pair. So we have the current price is $21.55. We drug our average buy price down. Price, but we're down we were at 32 when we dropped down into the teens. And yes, as somebody who purchased Misty at $44, I bought the peak because I wanted the income, and those income checks were good, and we used them to set up other things. I'm not the type of person who really thought about my average cost, and I really don't until I start getting into the metric range of my targets. So at first we had a target of 1,000 shares. We crushed through that target. We are currently sitting at 1,720 shares as shown on the screen. And we're on the slow march to 2,000. What we're going to be doing this week is seeing if we get a payment that's going to drop us below 20, and also seeing what the actual payout's going to be. I'm going to hold off on buys until we figure out those two things, because if we're going to dip below 20, then I'm going to wait and buy on Thursday, so that way I can get that NAV dip, and we'll put in a pretty good size order depending on what the payout is. Our goal is to get to 2,000 shares by August. So I'm going to get as many shares as I can get my hands on up until August, basically. Because at August, we flip, and then we're going to start paying off debt. And then those big payments that are coming in are going to be debt-based payments. As you can see, total cash value is sitting at negative $1,671.34. That is our margin, because we have a good bit of margin on this account, and we're using it. So that's where we're sitting with that. Now I'm going to switch us over so that way we can get the insights of where we're actually sitting. So what we've got here, this is our, pull that over. This is Snowball Analytics. And what this software does is it gives you, oh, there we go. Oh, that's beautiful. beautiful and big. It gives you a look into what is going on with your portfolio. It gives you some insights that the Charles Schwab doesn't. For dividends, it's your brokerage account really doesn't give you necessarily the insights to be able to accurately project where you're going to be. So we're looking at our cash value over here. So total profit is one that we like to look at because we want to talk about the dividends that we've received. So total profit, we are actually up 38% in total profit. Our passive income percentage on this portfolio, and you'll note the difference between this portfolio and my Robinhood portfolio that's based solely around weeklies. The percentage in the Robinhood portfolio, which we do have pretty well diversified, it's not like we put all of our money in one thing, so we're not 100% beholden to any one thing, because within the weeklies category, it gets kind of sketchy. In my opinion, it's just not as easy as going, hey, this is a weekly based on MicroStrategy, because the MicroStrategy one that we have is 2x leverage, so when it goes down, tanks your portfolio. Like, it's just what it is. But our passive income over here is 132.32%. Our passive income percentage yield over in that portfolio is 62%. Now, the other thing that we don't see over there are as dramatic swings. So pays not as good, more diversified, less dramatic swings. It's literally less. It's over 50% less than this. So hence why that is kind of gets the attention that it gets versus this one that gets the attention it gets. So future payments, this is the one that I like to look at. It updates itself every payout. We're looking at over the next 12 months generating $52,748.69. I'm a two-person household income right now, people. That's pretty awesome. So monthly, that factors out to around $4,395.72. Our dividend growth from May of 2024, we were at 32. See, I said we started in April. Over here in May 2024, we made $328. So last year we made $328 in dividends. This year, we've 10x that. I'm interested to see what June looks like, because now that we're starting in April, this was when we were rolling out the portfolio. And I remember distinctly August was when I had said, I'm taking it seriously, because we broke $1,000. So I'm interested to see where we're going to be sitting at in some of these portfolios as we're moving stuff around. We have an annual goal for this portfolio of $60,000. We are 81% to that goal right now, with the analytics software believing that this will be achievable next year. It's got two scenarios, which is awesome, because even the safe scenario has me at 2028 hitting that goal. The portfolio growth in the a little bit more aggressive scenario has me projected at 2026. I think that I've got a couple of moves left to make in regards to the way that we're allocating money and how the money is going to be shifting to just where it lands in the income portfolio. And once the debt is paid off, because the only reason we're not doing any type of reinvestment right now is because we currently have $28,000 in outstanding debt, some of which is tied to the assets in these portfolios. So like, you got to pay your debt back, so that way you can redeploy it. As we're sitting and looking at this, it's like, once that's gone, I don't spend all this money a month. Like, even if I do stuff that I want to do, it's like, it's not this. Like, and I don't want to do anything that's super expensive. So once the debt's paid off, the next thing that we're doing is setting money aside for a car, but we're also going to have a space before that car purchase where we bolster the portfolio and then save up for that down payment for the car purchase, and then get it factored in how much of the portfolio is going to get hashed out for the car, and then how much we have left over to continue to drive the things that we want, because like I should be updating my expenses by then, see what that looks like. We'll have more of my check going into the income portfolio, with the goal of getting probably about 60% of it just direct deposited right into those accounts. Between the income portfolio and the Robinhood portfolio, it'll probably be 50% in the income, 10% in the Robinhood, and then that'll be the 60% split. But then we'll have whatever's left for walking around money, and that'll be our walking around money, and we won't be necessarily taxing our daily driver for anything. Well, we'll kind of have our fun time built into the check, which will go into the daily driving card, and then everything else is either car payment, reinvestment, or debt repayment if we redeploy the debt from the credit cards. We'll see, because lump sums of money look good, but I might also have some other options for raising capital at that point. So that's where we're looking. Stuff is looking good. I'm liking it. I'm really liking that our total return, we're up 38%, even through the nightmare. Now that's through 30% drawback. So as far as our total, if we were just reinvesting, then the portfolio would be up a little bit higher, but we are actively using that income, because at the juncture, A, we took out debt to set this portfolio up. 2, we had a surgery and, some catastrophic downtime. So we ran up a little bit of debt. It's just what it is. So best laid plans, you're still going to get checked to see if you have earned the right to be in the space that you're in. And, we fought through some hard times, and I feel like we earned that right. And we're going to keep running it up. As soon as the debt is paid off, that's going to be the next game changer for us for this portfolio, because I think that we'll hit that goal much faster once we start lawn mowing down the debt. And I think that's basically what I got for you guys today. I mean, it's going to be an interesting month in June. Bitcoin's still over $100,000. We're duking it out, bears and bulls. I am a perma Bitcoin bull. I'm not necessarily a Bitcoin maxi. I do hold other stuff, but most of my focus is crypto Bitcoin space. So that's where my investments are. I tell people all the time, my money's where my mouth is, literally all of it. So aside from a little bit that's in my house, and once the debt's paid off, we'll start having to cross-reference HELOCs versus those 0% cash advances. I think the cash advance is the route to go, though, because it's not putting my house at risk. It's not putting my assets at risk. So, yeah, that's how I'm feeling. Tap in with me down in the comments. I want to know what your thoughts are. We're, over 80% to the goal as of the payments that we have. We'll see what June, once we upload those numbers and it recalculates and projects, we'll see where we're at. But our balances should be higher because we're going to keep buying. Until next month, people, this has been another episode of Portfolio Updates. And don't forget to hit that like. Don't forget to hit the subscribe. Don't forget to turn the bell notification all on. And for my Wolfpack members, I will see and chat with you guys down in the comments. But do not forget to share the video. Till next time, people, it's your boy Reckless Red and Arrow, and we are out.
Money on my mind, yeah. Focus, got no time for games, nah. I don't play, man, I'm all about that financial literacy. Investing in my future, building generational wealth. Dollar bills, they be calling my name, but I ain't chasing fame, I'm chasing change. Learn the game, now I'm playing it smart. Putting my money to work, it's an art. I'm stacking paper, building my own empire. No more living check to check, I'm getting higher. Investing in stocks, real estate, and more. Gotta secure the bag, that's what I came for.